Today we have a lot of good things to cover. Of course, we'll talk about the huge win for XRP. This is going to be the main focus. And we'll dive deep into the short-term potential of XRP, breaking down exactly what happened. And we will also talk about the long-term effects this has on the entire crypto industry and how it relates to other altcoins. So on July 13th, last Thursday, Judge Torres ruled in favor of Ripple and XRP in the District of New York. And this case was first brought forth by the SEC dating back all the way to 2020. And it's been forever. This has been one of the most significant cases that crypto has experienced in its entire timeline. So for the longest time, the SEC's actions against Ripple were viewed by so many people as a direct attack on the industry rather than actually protecting the investors. And because of this news, late 2020 and beginning of 2021, we saw huge, just wave after wave of bad news coming for XRP. XRP was delisted from all the major exchanges that support the US. And this was really significant damage to the market position of XRP. And then after that, the SEC really came even stronger. And the past 2 years has been them attacking crypto sectors left and right, attacking multiple exchanges, Binance, Coinbase, identifying random coins as securities. So now that we finally have this first ruling, major ruling, at such a large scale that ruled in favor of the crypto defendants, this is really a milestone for the broader cryptocurrency industry. And regardless of your personal stance on XRP, whether you like it or not, there's so many XRP army haters. This is still a significant pushback against SEC's regulatory overreach. And I think for that alone, nobody should be hating on XRP right now. It just doesn't make sense. I think as crypto together, we should really unite behind XRP on this case. So it's really great to see the whole industry celebrating this. Now, here are the specifics of this ruling. So in brief, 4 main sectors of the XRP offerings and Ripple themselves were in this official ruling. So first of all, XRP, the token itself that is trading on exchanges, is not an investment contract, is not a security. This is absolutely fantastic. This is the number one thing we wanted. Second, Ripple paying people in XRP, paying grants, paying employees, issuing rewards for their ecosystem, not an investment contract. Also really good. Companies can do whatever they want with their tokens to give to their employees. Great. XRP is not a security in and of itself when offered through a securities transaction. Good. But this last piece here, Ripple, the act of them selling XRP to institutions, this act without registration was still seen as illegal. So this was when, we'll get into this in a bit more, but Ripple was effectively, by selling to these institutions, a lot of the Ripple executives are basically suspected to be promoting XRP for more than it's worth and promoting it for profit, for expected profit from Ripple, the company itself, when they were doing these sales. So this act itself was seen as somewhat illegal and violates the law and still needs to be questioned and is going to trial. And if you want to see the whole official language of the ruling, here it is. XRP as a digital token is not in and of itself a contract, transaction, or scheme that embodies the Howey requirements of an investment contract. So it did not pass the Howey test. It is not a security offering. Rather, the court examines the totality of circumstances surrounding XRP defendants, different transactions, and schemes involving the sale and distribution of XRP. So this is actually kudos to the courts and the judge to separate different areas of the token sales. So if they just said XRP is good, there are a lot of things to be argued against, but they really separate out the buckets, which we'll go into in a bit. And this will play significantly into the future of crypto in general and how different tokens are offered as sales. Okay, now for the institutional side, Here's a tweet from Metaloma, and you really should go follow this guy. He breaks down these lawsuits in crypto in simple terms. It looks like the only thing left for trial will be the claim that Larson and Garlinghouse, which were the main executives of Ripple, they aided and abetted Ripple's institutional sales of XRP, which were the only sales that a court found to violate the law. So after this ruling, people have said, oh, like the judge basically said, sometimes XRP is a security, sometimes it's not. This is not the case. So here is one of the, this is the chief legal officer of Coinbase. He came out and said, don't be misled that Judge Torres ruled that sometimes XRP is security and sometimes it isn't. This is not the case. The ruling clearly identified that XRP, the token itself that's on the exchange, not a security, very safe. It's just that the act of the institutional sale, how they did it, how they promoted it, could have violated the law. So this is the main thing that is still left in question. So following this news, the good news didn't stop. Not only did XRP's price surge, but all the main exchanges that delisted XRP back in the days rushed to relist the coin because there was, I think, $10 billion more trading volume on the hour of the $10 billion 24-hour volume on the hour of the XRP lawsuit news. So Coinbase was the first to relist, and shortly after, Kraken, Crypto.com, BitGo, Bitstamp, all the major exchanges that offer to US residents relisted XRP. And Gemini is the only one that's left that hasn't listed yet, but they did say they will want to. And I want to point something to your attention as well, which could drive up this relisting frenzy even more. So back in 2020 and 2021, the list of exchanges and entities that delisted XRP didn't stop there. So not only was it exchanges, but also a lot of market makers, index funds, OTC trading desks that were offering for institutions. These guys had to not only delist XRP, but also liquidate their positions. So you see here, Bitbuy, they had to liquidate its XRP position under their own crypto index fund. B2C2, another OTC desk, Cross Tower, Galaxy Digital, Genesis, Jump Trading. The list goes on. There's actually a lot more institutions. So all of these guys have to now buy back XRP over the next few months and weeks if they want to offer XRP in part of their trading desk or part of their index products and fund products. So I think the relisting good news spree is likely to continue. This is something actually to pay attention to. Institutions haven't fully bought back into XRP yet. And speaking of these exchange listings, there is something very I found to be very interesting. So shout out to Mason, Crypto Mason, who alerted this news one day before the XRP lawsuit news break. Now, I follow Mason a lot, and this was the only thing that I saw was actually insider news a day early. So on July 12th, which was a day earlier, Bitbuy, one of the main Canadian exchanges, quietly relisted XRP. I found this to be weird, but I didn't read too much into it. What could really be happening there? But it turns out they must have had insider knowledge. Otherwise, why would they do this? A day before? It just doesn't make any sense. So they most likely wanted to capture the trading volume. They wanted to offer to some select clients maybe. So sometimes it is worth looking at these institutional leaks because you never know in crypto who really has the insider news. So shout out to Mason, who's been really fast in providing the XRP news. Okay, now shifting gears, what does the SEC actually do now? Now that Ripple has won in the short term over them. So the SEC is still claiming to have won this suit by twisting the words. Take a look at this. The courts and the regulators are pleased that they found something that violated the law. they found that XRP tokens were offered and sold by Ripple as investment contracts in violation of the securities law in certain circumstances. They directly jumped to the only thing that they found to be violating the law. And it wasn't even the XRP token itself anymore. That is completely clear. It's only the act of the institutional sales. So this like one area of transactions, but the trading is all completely fine. The SEC just picks that out and says this front and center and claiming that they somehow still won this case. This really is showing the SEC's real agenda. Are they really here to protect the consumers, or are they really trying to get people and get the crypto industry? I think their true faces are starting to show. And a lot of people are, rightfully so, calling the SEC on their bullshit. They're saying the sale of XRP on exchange is not a security now, which means the sale of all cryptos on all exchanges might not be considered securities in the future. There is definitely something to be made there, at least something to be referenced to in future lawsuits with the SEC. And again, looking at how the SEC is handling this situation, their legitimacy and their reputation and their overreach is really getting smacked for the first time ever. Really, kudos to the entire industry. And lastly, looking at some of the cases that's currently pending, where does this leave the Binance case and the Coinbase case? Because one of the biggest things that the SEC claimed that they have over Coinbase is that Coinbase was trading and listing these tokens for sale on their exchange and these were unregistered securities. But now XRP is fine to be trading on an exchange. And it's not like Coinbase themselves sold any coins to institutional investors. They merely list the tokens way later when the tokens are already live. So there is a case to be argued there that, as long as Coinbase only acts as the exchange with an order book and people are just trading against each other, they're totally fine. So something to be thinking about there. Coinbase could take that angle. And lastly, this is something I want to show you guys. Gary Gensler just came out and officially addressed this situation today about his thoughts on the XRP
How does the federal
lawsuit. I'm going to play this back to you guys.
court ruling last week in the Ripple case impact your stance toward digital asset regulation? Does it inject urgency into the need for federal legislation to clarify regulatory oversight of this industry?
Look, our mission remains exactly what I spoke about earlier, about investor protection, promoting capital formation, and the markets in the middle. This is a recent decision, just a handful of days ago. We were pleased from that decision, recognizing the importance of protecting investors on the institutional investors in that, and that the court movement with regard to fair notice, and while disappointed on what they said about retail investors, we're still looking at it and assessing that opinion.
So definitely a much weaker response from Gary himself now. He is basically disappointed in this in the ruling when it comes to the retail investors, because the ruling effectively said, if you're a retail investor and you're buying XRP, you're trading it on exchange, that's totally fine. Gary is disappointed, which he should be. Like, what does he have to do with people trading coins on exchanges? And then he also said, he's treating this as an opinion, which is kind of a hint. There's another longer interview which said, basically he is going to try and appeal this this decision. But all in all, definitely a smack on the wrist. Before, the SEC and Gary really were never ruled against, but now things are changing. So definitely, this makes me really happy. And okay, let's summarize this. And so far, all of this news, what does this really play into in the long term? What does this all mean? There's this really good thread from Orlando BTC, just going through the entire ruling and some future speculation as well. So a few major points here. This case will be heavily referenced in many future SEC battles to come. But this is also a major shift in the power dynamics of the crypto industry and when it comes to regulations, because finally, for the first time ever, there is one case where the courts have ruled in favor of the crypto defendants. So I'm not, a lawyer by any means. I'm not even familiar with how all this works. But basically, apparently judges, even if they are pro-crypto, when they have no previous even history to reference to, they will have a hard time ruling in crypto's favor, but now they at least have a cover. And something to note is that this ruling is not yet binding. So here, this case is not yet the law. So it is not yet a precedent. It is just simply something people can refer to. It is potentially persuasive for other district courts to follow, but they don't have to follow it, right? So if this same trial goes outside of New York into other states, they could totally, rule in the other direction. But there is an argument now. So what the SEC may do next could really change this. If the SEC chooses to appeal this, then whatever the ruling is, right, if they don't end up overturning this decision, then this becomes binding law, which will be huge, even bigger. If they don't appeal this case, then Coinbase can refer to this as saying, the SEC lost. So again, back to the Coinbase argument now, we're just trading coins, so we're okay. So a lot of crypto lawsuits can refer to this in the future. So the SEC is in a real bind, and according to Gary Gensler, I think they will appeal. Definitely still something to watch out to going into the future. And in terms of how this affects the token sales and other tokens that are how they're going to be distributed in the future, there are some key distinguishments here. So basically, there are 4 buckets of token sales in this Ripple case. First of all is institutional sales. So institutional sales is the most risky one so far. So the judge ruled that institutional sales are securities. This could potentially affect private sales and OTC deals, but they have to be really large scale. Remember, this XRP deal is $700 million when the Ripple execs coming from this US-based company tried to sell XRP tokens to other institutional investors. So this kind of a large pitch could be under question. When it comes to VC investments, we'll talk about in a bit, but those are still safe. Second bucket is with programmatic sales or selling on an exchange. Effectively, you just list the token on an exchange, people start trading it. This is totally fine. So if you have a coin, if you're a founder, and you just contact an exchange, it goes on the exchange to list and start trading, that's totally okay. The third bucket is other distributions. So you can, if you're a team, if you're a founder, you can use your tokens however you want. So ecosystem funds, rewards, other buckets that are just given out for your employees, for your ecosystem users, your platform users, totally okay. And I think this could even make an argument for like staking, for yield farming. I think those kind of distributions as rewards kind of go into this other distributions part. It wasn't specifically mentioned because Ripple XRP wasn't that heavily, DeFi coin, farming coin, but it is there. It's kind of in the same bucket. And then lastly is insider sales. So insider sales, we're going to get into, which is more like VC sales, but more earlier sales. So overall, if you look at this summary here from Adam, I have his page here. This I think from what I've read and from what I've understood, biggest win for crypto exchanges. If you're a crypto native exchanges, you just want to list tokens, there's even the whole act of it is much safer now in the security law's eyes. So if you want to sell a token through an exchange, definitely good. Institutional private rounds and OTC, large scale, maybe not. But if you're doing a VC investment, I am a VC investor. Luckily, I've been in the space for 5 years now, and I've invested in over 100 startups. Typically, when you're a VC round, you don't get into the OTC scale kind of stages where you're selling like hundreds of millions of dollars worth of tokens. It's a few $1,000,000 worth in a early startup stage, usually seed round, or sometimes there is a private A round similar to a private A round, like valued round in traditional VC crowds. Now, these offerings usually go through what's called a SAFT agreement, simple agreement for future tokens. These agreements are under the same regulation exemption, what they call Regulation D in the Security Acts. But basically, it's classified as the same type of offering as a SAFE agreement, simple agreement for future equity. These are a special type of exemption that allows basically sales of unregistered securities for really small startup companies. This has always been there. So if you're a VC and you're investing in, early rounds of projects with their tokens valued at like 20 million, anything lower than 100 million, those are totally fine. And many times to get around this whole like mess of it, these companies never even incorporate themselves in the US. They don't sell to US investors. They don't sell to any US residents. They are incorporated offshore, sometimes in Europe, Singapore, Dubai, Cayman Islands, etc. And then they never even sell any US entity equity. So these parts for VC investments, I think it will continue to be fine. It's just that when it comes to larger OTC deals in the hundreds of millions, those might be affected. So think of like when Polygon, right? They sold like $200 to $300 million worth of Polygon tokens at the bull market peak to people like SoftBank and those other, private equity firms. That could become an issue, but earlier rounds totally fine. And the last part is when you're distributing your tokens to the public, to public retail investors, you should try to either sell via exchanges, direct listings, or try to distribute via protocols. So things like farming, liquidity mining, staking, these are fine. If you want to host like a DeFi sale, that's probably fine. But if you're doing a large ICO, a large IEO, launch pads, these things could be coming under the question soon as well. So watch out for that. So I think going into the future, VCs will still be there. We'll probably see a lot more just direct listings. So a coin comes out and then Binance or some other exchange announces it's going to start trading. If you want to buy it, just day one, you go on the exchange and buy it. Those ICO, large IEOs, they might be going away just for pure speculation from this XRP ruling. Okay, and then lastly, something to watch out for, especially for XRP, is that the question left to be answered is how will XRP resolve this situation with their institutional sale, the act of it, which did violate the law. So XRP now, the judge basically ruled that $700 million in the XRP sales in the institutional round were illegal and they need to possibly be paid back. So how will this be settled? XRP is still on the hook. Ripple is still on the hook for this charge. They themselves are very rich, so they can pay this back. If it's a complete fine for $700 million, it will be quite expensive, but I think it'll be much lower even if it comes down to that. But this still needs to be resolved, and this is the main thing that needs to be resolved for Ripple. Okay. Moving on to the effects on other coins from the XRP lawsuit. I think most directly, a class of coins that is now under new scrutiny and new set of eyes is these ISO 20022 coins and other payment coins and banking coins. So these are a list of compliant coins that usually gets grouped into the same category as XRP. So ISO 20022 is a standard that is used to replace this new set of cross-border payment technology that's starting to replace SWIFT, which is how banks used to communicate with each other to send funds between one another internationally. And on this settlement technology, there are a certain number of cryptos and blockchains that are used. So Ripple is on here, Stellar is on here, Quant, Hedera HBAR, IOTA, XDC, Algorand, and Cardano. These 8 coins usually are grouped together. And specifically, I think Stellar for sure is the closest resembling even cousin of XRP. Stellar's founder was a previous, I think, co-founder of XRP, if I wasn't mistaken, and they are effectively offering very similar technology. XDC is also a blockchain network specifically built for payments. So I think XLM and XDC, how they will do, will directly correlate with how XRP does going into the next weeks and month. And then the other coins on this list, definitely something to watch. These are going to be heavily speculated on. In terms of other coins, there are a full list of coins that were classified as potential securities not so long ago by the SEC. On here, a lot of major coins like Cardano, Solana, Polygonmatic, Cosmos, Atom, Algorand, Sandbox, Decentraland, Near Protocol, Filecoin, all these guys actually had huge rallies right after the XRP announcement. So this was mostly speculation because people were speculating that now that XRP has won the lawsuit, these guys have a better ground to be, winning this lawsuit or at least getting a settlement. The SEC is not immune. Now, I don't think this kind of pump across the entire altcoin industry is so deserved. Yes, there is something to be referenced, but when it comes to each of these coins, I think if you are not offering a very similar coin to XRP, like a payments coin, and your coin serves a very different purpose, and it has a different company structure, etc., I don't know if you can say, XRP is not a security, so that Solana is not a security. That's kind of a far fetch. I will say that how these coins are offered initially on exchanges, how they're trading on exchanges, that is now much more favorable position for the crypto side. So when you're in an exchange and, for example, you have Solana listed and the SEC comes and says you cannot trade Solana, you can refer to this XRP case and say, look, all these other exchanges trading Solana was totally okay as long as we weren't Ripple themselves selling XRP in this OTC institutional deal. So I think exchange listings will be easier going into the future. SEC can't just say, blah, 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 exchange, delist this coin. That is definitely a good win. But when it comes to this actual classification of individual coins, I think it has to be case by case. Now, switching gears, right after this XRP news broke, a lot of people are calling for altcoin season, altcoin rally. Bitcoin dominance is going to fall off a cliff. Bull run is starting. How much validity is there? And I think this is definitely a big section to leave off on. So people were calling for bull run, right? Because on the day of, all the altcoins are up. But really, is this going to last? I think it's a bit too early to give a definitive yes. And in fact, I'm still on the fence. So a couple of things to consider here. First off, the Bitcoin cycles is still in my opinion, the number one thing to watch when it comes to how the cycles are doing. And here I have the 4-year cycles as marked out by the halving events, right? And you see, we still have 8 months to go until April of next year, when usually the real kind of euphoria stages start to kick in. And altcoins just continuing to rally now, I don't know. I don't buy that just yet. Many of the popular coins, especially from the last bull run, I think are not out of the clear waters just yet. So going back to the Bitcoin analysis at the beginning of the stream, just a short-term pullback from Bitcoin could easily drag back all of these altcoins, which would be super healthy considering we've had a mini bull run for the past 6 months now. So many people are calling for start of the bull run way too early, in my opinion, and I would just say be careful. And also something to remember, what is really driving this bull run now is BlackRock, is the Wall Street, and they have made their intentions perfectly clear. They want to work together with the SEC, push out the crypto native players and control the industry and push up the coins that they clearly like, which now we know is Bitcoin and probably Ethereum most likely. But other coins, nothing is said. They didn't say anything about altcoins yet. So the cyclical nature of Bitcoin and their rotation from Bitcoin to alt season really might be disrupted. Think about it. To control the industry, will they just give us all the easiest time and the early bull run and the extended bull run that everyone wants? Or will they mess with the timing, which is perhaps starting the bull run early before the halving happens, but the decoupling Bitcoin, Ethereum, and the rest of the market? I think that really could happen. So the market in altcoins is heavily dominated by the crypto native players, and Binance is the king of altcoins. Why would BlackRock, why would Wall Street pump altcoins? It just doesn't make sense. They will be pumping Binance's bags, which is clearly now identified as their number one enemy. So I don't know. I'm not buying that. And this is why my current strategy is to hold large bags of Bitcoin and Ethereum, because I think regardless of what happens, Binance side, if they decide to pump, Bitcoin, Ethereum will be there front and center. BlackRock, Wall Street, these two are definitely in their portfolio going into the next cycle for sure. The Bitcoin halving cycles, Ethereum 2.0, Ethereum sharding, which are all coming catalyst events, all really good. Prices are not that high yet, looking at historically speaking. And even if, altcoins are entirely decoupled from Bitcoin because of the institutions really trying to kill off the crypto native players, we can jump on the chip just by having Bitcoin and Ethereum. So I think when it comes to calling an early altcoin bull run, I think it's way too early. Yes, there are certain sectors, which we'll get into in a bit. And yes, you can try to play the short-term timing of it and rotations. But when it comes to long-term accumulation, my focus is still mainly on Bitcoin and Ethereum. Okay, and Bitcoin dominance is also showing us something very useful here. So I've had this chart drawn up for a few months now. So since the May crash in the 2021 bull market, right, when really the bull market peaked, Bitcoin dominance has been going in this sideways trend here, right? Whenever it touched the bottoms here, this is when altcoin dominance peaked, and this is when you want to sell altcoins. Whenever Bitcoin dominance peak, you want to buy altcoins, sell your Bitcoin and Ethereum for altcoins. And actually, this chart here is even better. So with this formula, what I did is taking in 1 minus crypto cap total 3, which is the total percentage of dominance of Bitcoin plus Ethereum divided by the total market cap, right? So this is not just Bitcoin dominance, but rather Bitcoin and Ethereum dominance. So by looking at this chart, effectively what it tells me is the Wall Street coins, the Wall Street favorited coins, Bitcoin and Ethereum, compared to the rest of the big overall crypto market, how much dominance is there. And you see, even though in this past 2 weeks, there is definitely a bit of a reversal potentially playing out here. Over the long term, Bitcoin and Ethereum has been dominating the market since November of 2022. And the longer term trend was for Bitcoin and Ethereum to continue to dominate and altcoins to bleed against Bitcoin and Ethereum. And yes, in the short term, we could see this. Let me get a price range. We could see this continue to come down, maybe another 5% here, right? And considering like weekly timeline, this could last 2 weeks, maybe 4 weeks of alt season for the short term. But from a TA perspective, once Bitcoin and Ethereum dominance comes down to touch this, let's say 66% level, there is a lot of support here. So by that point, altcoins would have extended themselves so much that I would really be careful even holding altcoins then. And I would really watch what happens with Bitcoin and Ethereum dominance here from a TA perspective, right? If this bounces from here, this would show a macro kind of reversal here where Bitcoin dominance, Ethereum dominance continue to rise going into the next cycle, which is kind of playing into the perspective of BlackRock splitting the entire market in half and really, pushing up Bitcoin and Ethereum especially. So something to pay attention to. This altcoin rally could continue, but I would not put it longer than 1 month, just looking at how this is playing out. For this alt season to last like 2-3 months, you're talking about this major reversal in Bitcoin dominance, in Ethereum dominance, which I just don't see it in the chart right now. There is a very significant support level here that is highly likely to bounce from. So this is kind of my bottom line here, and timeline that I'm keeping in mind. Yes, there are certain altcoin sectors that are benefiting and outperforming the market right now, but I will give it 2 to 4 weeks, not longer than 1 month, before I have to seriously consider dialing back how euphoric I'm getting in the altcoin markets and just going back to the roots of accumulating Bitcoin and Ethereum. Okay, now looking at lastly, some specific sectors, right? We've talked about XRP's price, right? We've talked about how this rally in XRP really is just a long-term breakout above the kind of 60 cents level. So if you look at from throughout this last bull run, when XRP was really first deemed as a security, this lawsuit really first came out, there is 2 years of pent-up price action right around the 60 cents level. You see here, 2 resistance touches, support touch, resistance here, and now 60 cents was finally broken. So I continue to hold my XRP position. I put in a long here right around the 60 cents level when the news first broke, quite luckily. But yeah, I think XRP, the traffic is not done yet. The volume is not done yet. There's a lot of institutions that are yet to buy back to their positions to offer in their index fund products, for example. And related coins, Stellar, XDC, HBAR, Cardano, Quant, Algorand, those guys, IOTA, I think could still see volume going into the next couple weeks, leading maybe 1 month. Another sector to watch, right? We talked about DeFi Summer 2.0 in last week's stream. So projects like Uniswap, MakerDAO, Aave, Compound, these guys are really leading the market. So when you look at the crypto bubbles, on a week, this? On a weekly to monthly time frame, you see the standout here, right? Weekly XRP, XLM, and then you see a lot of these DeFi coins: Injective, SNX, Compound, BitDAO token, which we'll talk about in a bit, Link, and then the last sector will be layer 2s going into the second half of 2022, continuing to be, I think it's going to continue to dominate the market because of EIP 4844, because of proto-dank sharding. It's going to be a major boost, major upgrade for all of the Ethereum layer 2s. The things like OP, things like BitDAO's token, which is now the Mantle layer 2, Arbitrum, Polygon. In fact, my top 3 favorite layer 2 coins, my number 1 is Arbitrum, then Polygon, Optimism. These 3 are top of my list. And if you want to check out my full layer 2 breakdown with their tier list, there's a full video that you can find on my channel. We just posted a couple weeks ago. So check that out. Yeah. And that's basically it. So I think these few sectors, DeFi, layer 2s, XRP related payment coins, going to outperform the market, at least in the short term. So pay attention to them. But when it comes to the more hyped up coins from the previous cycle, metaverse coins, layer 1 coins, whatever your favorite coins are, I don't know if you can call such an early alt season. So focus on accumulating Bitcoin, Ethereum, and that's the end of the question.